The share of Evolution is declining, and this may be a significant opportunity for long-term investors. Evolution is a company. It is an online casino company, but it is a kind of online platform that offers online services in casinos for various other casino operators. Especially in white label and business to business, it's a super interesting company. I once shared a lot of in-depth information. The CEO has been a member since 2015. The company thinks from the perspective of shareholders, considers return on equity, and thinks about share buybacks, which they have also done in the past few months, although it only represents about 2% of the total outstanding shares. They are considering whether or not to pay dividends, although that is actually my reason for not wanting to invest too much in Evolution. And actually, the only downside I see to this company, which is currently declining, is that they are specifically focused on a sector, namely online, casino and gambling, which can be quite risky in terms of political interventions. If the government decides to tighten regulations, it is detrimental to Evolution, but this company is active. Fascinating. It is a mini acquirer. They buy smaller casino operators, especially online offerings. They also develop casino games. I think that Evolution is a very interesting company, but much more importantly, the stock is also interesting. The valuation is simply good and really seems like a no-brainer. But as often happens, I might be wrong. Anyway. As I show you, Evolution is currently my largest position. I do not want to exceed 10% in this account that I have, so my position is currently 20,000 SEK in Evolution. And I may have bought a bit too early, but I'm not worried about that. It is currently down 10%. However, I believe that Evolution is undervalued with really high upside potential, but we will see. Time will tell. Evolution has gone into a negative trend at 1,300. I will show you this in my analysis. But first, of course, from my perspective as a long-term investor. Let's think about the intersecurity values. The situation with intersecurity values is difficult. The estimate from Morningstar is the best. SEC. Now SEC stands for Swedish krona. You can also look it up in euros or dollars. It seems a bit confusing because when you search for Evolution, the stock shows something like 200 billion SEK. The company alone is valued at around $18 billion in euros or dollars. An 18 billion SEK company is not super large. It is large, but we have often seen companies valued at 20 billion easily grow tenfold to reach 200 billion. And I believe Evolution is such a company. Of course, we are talking about the long term here. In the short term, the price target from analysts is approximately plus 44%. The upward potential seems to be at least plus 30%. The historical valuation of Evolution indeed suggests that the stock appears to be significantly undervalued. Never before has the PI ratio been as low as it is today. Currently, the PI ratio is 16, while the future growth still seems plausibly high, despite all the necessary risks associated with this earning model. We also see this reflected in the forecasting tools based solely on the short term. By short-term forecasting, I mean the next 2 years. The normal multiple of Evolution is a PE ratio of 30, and that seems a bit on the high side to me. Based on that, the total potential annual return is 160%, with an average annual return of around 50%. But let's assume that Evolution continues to trade around this price level of 18, and they can achieve a profit growth of exactly 18% and 14% EPS growth. 18% and 14% PS growth. Then the annual average return is 25%. Also, if you look at the long term, which is of course much harder to estimate, but when we assume a PE ratio of 15 and also an EPS growth of around 15%, which I think is realistic. For this type of company, it is not excessively high, and it could also achieve an annual average return of 18% in the long term. And now let's take a look at alternatives such as the Magnificent 7 or the S&P 500. All high valuations, a PE ratio of above 20, even 25 or higher. And here we have a gem, Evolution, listed in Sweden with a PE ratio of around 16. A sublime earning model, which we will also see shortly in the profitability and profit figures. And also, looking at, for example, the margins, it is higher than the sub-industry average or the comparable peers. Do not confuse and compare Evolution with other casino companies. I once read an analysis by an analyst who compared Evolution with casinos. Fucking bullshit. Evolution provides high margin products to casinos. They make money from all casinos worldwide. Evolution has a scalable business model, much more superior, with much more diversification and risk spreading. The only thing is that Evolution stands out with the growth of online gambling worldwide. And that, of course, also has regulation and governments that can intervene, which can have a detrimental effect on Evolution. But if we look at, for example, the operating margin, which is very interesting, it still scores a higher margin of 16 to 15% compared to the sub-industry, recently 12%. So currently the operating margin, or the EBITDA margin, is around 60%. Let's delve further into that profitability margin. You can see the EBIT margin around 62%. The EBITDA margin is around 65%. Net income is around 65%. And the 5-year average is also above 50%. So it is a very lucrative and profitable earning model. Yes, over time, it can all decline, and it likely will as the company gets bigger and bigger. But it is still interesting that they make so much money. And more interesting is the return on equity, which averages above 30% over 5 years. It also remains around 30%, and the return on total capital is significantly above 15%, which I believe is a strong indicator of a company with a sustainable competitive advantage. And that is also one of the reasons why I do this and why I mean this. Development seems very promising, but we can of course miss the mark. That is the uncertainty of investing. In the market, the share is not valued as highly, so there are trading opportunities. Many analyses don't align. Possible solidarity may also make assessments that show an attractive profit opportunity. The current PI ratio is, as mentioned, at 16, and the luck ratio is around 1. That is quite nice for this type of company, if you ask me. However, a downside is that the price to sales ratio is, for example, high. They generate around 2 billion SEK in revenue, and the current market value is around 18 billion. So the price to sales ratio seems very high, but the valuation is justified in my opinion given the higher profit margins, and there isn't really a reason to assume that those profit margins will suddenly drop drastically. The dividend yield is currently 3%. Actually, I find the downside of Evolution to be that they are paying out the dividend. I would prefer to see them buy back more of their own shares as they are currently doing. They are now buying back shares up to 2%, and according to their policy, they are allowed to buy back a maximum of 10% of their shares. I would think, why don't we just buy back more shares? That would at least be more appreciated by the shareholders in the short term. And management can then show as a sign that, hey, look, our company is indeed actually undervalued. We are now buying back shares, and we can later issue them at a higher price, allowing us to raise more money and achieve a return on our own share buyback program. Now, the revenue growth is naturally slowing down, which makes sense. Therefore, in the short term, that declining trend is also ongoing. The 5-year average showed that revenue growth was very high, and for now it is estimated that revenue growth will be above 15%. And also the EPS growth, as indicated, is estimated at around 15%. Even for the long term, that is still 15%. Other growth figures are still simply outstanding. So we are just seeing a short-term stabilization, if you ask me, of the share of Evolution. What may have been valued a bit on the high side at first, but since that peak it has dropped to about minus 37%. The fair value is estimated at around 1300, and that 1300 is roughly around this level. This means that you can cause the upward potential of the economy in a certain way. It seems both in the short term and possibly in the long term, at least in the short term as possibly in the long term. The exact reason why the share is dropping so much in the short term, I'm not sure. If you believe in technical analysis, there is a possible lower support level around 800. That means there could be quite a significant further decline. The only thing I know is that I have allocated 10% of my money to this stock. That is quite a lot in terms of allocation. That is actually the only company Evolution that currently has such a high. That is the only thing I know. I think it is undervalued. I believe it is a great company for the long term, and that I can achieve attractive returns here. But why is it declining in the short term? We will see who has the advantage, the long-term or the short-term investor. Note that we never give personal advice. I also never give stock tips. I only indicate what I do, what I think is useful for my money. Sometimes I'm right, and sometimes I'm not. It can always be disappointing, so be careful with what you do. Never blindly copy someone. Research this company yourself. Find out why I might find this interesting company. But also consider for yourself, what are the risks? Is there also a risk of losing money in the long term? That is the real risk you need to realize when investing. I am curious about what you think of evolution. Let me know.